So welcome to the Deal Desk, where every week um, Rob Lewis and I, Alex Buriak, go over what's going on in the markets, what type of products you can use, how can you scale your business, what are you doing as a borrower, a broker, and a lender that can actually be used to make more money with more products and get deals done faster. So this week, we're going over everything about brokerages, what they are, how do you use them, when should you use them, and even how brokers work with other brokers, how borrowers work with brokers, and a little bit how that works and what people do. So, in that regard, let's start it off. So, Rob, we are a brokerage. And
See,
why don't you, on your own words, what does that mean to people? A lot of people don't understand what a brokerage means. What is a brokerage, especially in the lending aspect?
so a broker is somebody who has outlets to other banks, other lenders, other lines, other families. When you go to a banker, that banker has their product, they have their loan committee. A broker is an individual that takes that loan and then they take it to their network. And they are sourcing and finding and hunting capital for that request.
Awesome. So,
That simple.
no, it is, and the thing is, the reason why I wanted to define it is this. There sometimes is a negative connotation in the
Yeah. Yeah.
when you say the word broker, because like, well, you're not a direct lender. No, but what we do have access to is direct lines where there's a multitude of products for a multitude of situations. And because we have a lot of different aspects of different lines, we have a lot of ways of different structuring different capital. The most use case that we have success with is like in the commercial space, in the hospitality space, in the multifamily space, and things like that. You also are able to get a lot of things done when you're even in the short term, like fix and flip space and the DSCR space and things like that. But the reason why people come to brokers, instead of trying to shop a multitude of lines, you have a brokerage that does it for you into the regards of your best use case on the capital that you need. So, let's start with the borrowers first. So when borrowers use brokers, kind of let's set them up for success. What is it best to think about when you're using a broker? Walk the borrowers through that process. When should they tag onto a broker, and what is it like? And some of the even stipulations of working with a broker. What could they expect?
So I think first you need to vet your broker because the 80-20 rule in all businesses, 20% of the individuals actually do the work of a company where 80% feed off the company. I've seen the same thing with brokers. You have brokers that I sometimes am dumbfounded that have no credit training. They do not know lending. They do not know structuring, but they definitely know how to take a deal and throw it out and wish it the best of luck. And that's not what you want representing you, which is why I think you and I do so well, because we're looking at the opportunity. So you and I, are picky on who we work with. So the people in our group, the brokers in our group, understand lending, are coming to us, with something that, is feasible, doable.
Mhm.
So I think the first thing you want to do is vet the broker. You know, do you have experience working with this type of request? What is your success rate with this type of success? And really, really vet them and see what their network is like.
No, also, so and for the people listening now, and for the people listening that's going to be later, what is the success rate we're seeing right now? When we see a deal and we say, yeah, we have opportunity for this to give you some lunch, what would our shop kind of look like right now on success rate?
So we actually measure our take in to close. And right now, our measurement is we have a 91% close ratio. And what we haven't closed, either the terms change, or not the terms, but either the deal changed or they lost the opportunity, but we we as a shop have a 91% close ratio from taking the application in, finding the source of capital, and getting it closed, which is impressive because again, we have a full spectrum of what we're doing. We're doing fix and flip, we're doing DSCR, we're doing multifamily, we're doing hospitality and hotels. So it's not like we specialize in a product. We are versed throughout all the real estate products and are still able to source, find capital, and get it to close, meet the need of the client, which is more important, but get it to close.
So that also brings up another interesting aspect of how to like vet your broker. There are going to be brokers that have access to a lot of short-term capital. There's going to be brokers that have access to long-term capital. There's going to be brokers that have access to, they specialize in commercial. We run a very specific type of opportunity where we have access to either commercial, residential, business, land, development. We have those opportunities because of the time, years spent making the relationships with the lines. Kind of go over that. What's the difference when you see a brokerage shop that offers one type of product and a broker shop that offers many types of product, whether it's real estate involved or business involved?
And I see benefits in both. Somebody that's specializes in that one deal, then they know it. But if they receive an opportunity that does not fit that measurement, are they networked? Do they have the skill set to find that capital? Where we are just hybrids, and we know all of it. But we do get a lot of deal flow from brokers who know they're brokering to a broker, bring it to us and say, hey man, this is all I do. This guy wants to buy this hotel in Florida. Can you help them? And so we do get a lot of business and cross referral that way, and we work very smoothly with those individuals. And then the fear of working with broker to broker is that thing called a broker chain. Do we want to talk about that?
Yeah, so we're gonna go start um going into how brokers work with brokers as well. But let's kind of stay with the borrower for right now, because that's going to be our next topic, how brokers work with other brokers. Because sometimes they get a deal that they just can't turn down, but they may not have the app, but they may not have the lines for it. Or they tried and failed with the lines that they have. But as a borrower, you said something very interesting, the very first question, how to vet the broker. Anybody can ask a question and answer it, but how does a good borrower vet a broker to see if this is the right shop for them or not? How
I,
does
I'm,
how does a
you know,
borrower even vet a lender?
Froze up there for a second. Say that last part again.
So as a borrower, how do they vet a broker? How do they vet it, even if they're going to a direct lender? How do they vet people to know they're not just getting told what they want to hear and somebody's just feverishly trying to figure it out?
Well, again, I'm old school, but I like to work with people that are like me. So I want to work with someone that talks like me, thinks like me. You know, the used car sales guy that's out there. We've had them. If you start feeling that feeling, but you got to have a feel good. And
Yeah.
so I think when especially with AI and internet, there's ways of researching and vetting people, but you can also kind of tell, engage if somebody's on the up and up with you. Read them. If you're not feeling comfortable with them, yeah, I wouldn't do it. I mean, our industry is full of, and I'm going to say it, my apologies, but our industry is full of so many clowns
Mhm.
that if you're feeling uncomfortable, there's a bunch of us out there. Pick up the phone, call the next one. Vet when you're comfortable. Um, Vet somebody that in your network. Hey, do you know a guy? Um, we most of our business doesn't really come from marketing. It comes from people who know us and refer us.
Mhm.
And a referral is to me always the best. If somebody has worked with them, had a good experience, that's a good source to go to. But definitely asking the questions, feeling good about it, and also Test their communication. Are they communicating with you? One of the biggest drawbacks in our industry is lack of communication and lack of update.
Mhm.
And when you're making a major purchase or you're on a timeline, not knowing is the most uneasy, uncomfortable feeling, and you don't want to work with somebody that's comfortable putting you in that position.
Yeah, absolutely. One of the things that I want to go over on the borrower side, one more is walk everybody through when it's appropriate to have an engagement letter with your broker, and if there's any upfront fees prior to closing with your broker. When is that acceptable? When is that not acceptable, in your opinion?
I mean, I think on simplistic opportunities like a DSCR or a quick refinance or a fix and flip, I don't think the upfront fee for a broker is necessary. I don't think the engagement is necessary. But on something that's highly complex, something that's going to be, you know, a deep dive, 20 million, 40 million, huge underwrite, huge write up. I think those opportunities are necessary because what you don't want happening if you're the client is engaging a broker, multiple brokers that are shopping brokers, and then your deal is out, your opportunity is out there, and it's getting triple shot. So you might have an excellent opportunity, an excellent product, but by accidentally hitting that wrong broker that sent it to the wrong broker, now you're mass shopped, your financials are out there, and then your great opportunity gets watered down and looks like a skeptical opportunity because it's being so mass shopped. And that's what we try to control with with an engagement. But that's when an engagement is appropriate, is saying, hey, do you have the network? Let's talk about it, let's see it. And have you done this deal before? Yes, we have. Here's some proof of concept. Then that comfort level of that one individual who is a professional, who is going to serve you right, you want to be locked in to that one to ensure you're not mass shopped or watered down on an opportunity that's probably very bankable but gets lost because, oh, I've seen this before. Oh, wait, I got this yesterday, now I got it again. Nah, we're going to pass on this. And it happens every day in our business.
And another thing that I want you to comment on is this. Rob said that working the file. One of the reasons why even we have a very high success rate when banks have already seen the deal, but we still present it, is because we actually look at the room, look at the data room, look at your files, create the package, look through the math, go through the pro formas, look through all your paperwork. As a good broker, the broker should not be getting your information and then just sending it off. It should be evaluated. It should be pressure tested against underwriting guidelines. It should be pressure tested against the guidelines that you're sending to the bank. You should find errors in the data room prior to sending it. So there's a lot of work as a broker to understand multiple different pathways and multiple different opportunities and multiple different lines. So there's a lot of front end work that should go ahead to make sure the package is delivered with clarity to the line. So if you ever send anything to a broker and it's not, it's like, they send an application and a bank statement and they're like, and you're asking for like $7 million, know that that deal is probably not going to get funded because a good broker would have formed a data room against the guideline, against the bank line, against everything. There's been probably two or three calls before it gets shipped out to the bank lines,
Right. Yep.
understanding the process. And that's why you may see some brokers charge for some time up front because it may take a few days, a week, or more, depending on how hairy your deal is, to fix the deal to be able to send it out. Would you agree to that?
No, I'll agree to that. And you and I had a call this morning at 8:30 where we were explaining that every and also the key is knowing who I'm sending it to, knowing their guidelines and what they're looking for. There's some opportunities where I'm sending it to X lending institution, and I know they don't like to see certain things, so I'm going to take it out of the file. I'm going to remove it from my write up. So it's kind of like a job resume where I'm applying for this and this. I might tailor my resume to that job specific. Same thing in lending. When I'm loading it to that lender specifically, knowing what they're looking for and what they're underwriting. if I'm sending the same exact package out and just throwing it to the wind and wishing it the best of luck, I'm going to miss opportunities because there's going to be things in that file that they don't want to see or that they don't like, or maybe it's more information than we should have gathered, and it becomes a turn down when it shouldn't have been.
Absolutely. Now, every 15 minutes on our show, I do this every week. I make the ask. Guys, if you find this call valuable, make sure you go to our social pages, our YouTube pages, and everything like that. Give a like, give a share, give a comment. Let people know that we meet every week to go over different types of products, different types of strategies, and different ways to close and fund your real estate and businesses. It will really help out to let the audience know that there is a group out there that's here just to educate and hopefully make their businesses grow larger. So, as we move on to the next segment, we are going to go over how brokers use brokerages. And what I mean by that is this: there are some shops out there that are pretty seasoned brokers, but they have a deal with a client that they're like they just don't have the opportunity, or they thought they had the opportunity, and every line opportunity they had to close it didn't work out. Or even the more common one is that you are new to lending. You added brokering to your vertical in your business, whether you're a wholesaler or a hard money lender that's adding product or whatever you're doing. You've decided to add lines, but you didn't know where to go. So you added a brokerage shop. So you're technically brokering to a broker. Rob, walk through that process. How do other brokers and starting out people in lending work with shops like ours or brokerage shops?
So, and we've actually started adding lenders, brokers to our company through an agreement, through a shared plan. Because I'll give you an example of a gentleman that's starting with us next week. I won't say his name yet, but he starts with us next week. But he was a banker for many years, and he knew his product. He knew bank and he knew loan committee. Called me up and said, "Hey man, I'm kind of bored. It's like eating vanilla ice cream every day. I know there's other opportunities out there. I hear there's chocolate and strawberry. So would you mind showing us that?" And I definitely respect that. And the very first deal he had was a major development out of Florida, and he's never done a development deal before. So the fact that he called us up and said, "Hey, can I work with you on this deal? Can you help me mentor me through that?" Those are calls that we get a lot. But even saying we'll reach out to people we know on a complex deal that maybe needs a capital raise, and that's not my strength, but that's yours, and that's a couple of people in our network. So that type of networking in the broker channel is healthy and happens every day. And again, I go back to maybe you don't know lending quite yet, but as long as you're humble enough to know that, and just like this the gentleman that we just started. He's like, I'm going to want to do joint calls with you because I know you can speak the language. And Alex, you and I do that stuff every day,
Mhm.
and vice versa. There's opportunity. I mean, I've been doing this for 35 years, and I don't know it all yet. I pretend I do, but I don't. Every day I learn something new. And there's days I've called you up, and said, "Hey, this is your strength. I want to get you on the phone. Let's see if we can meet this need," and you and I work it together. So don't know if that addressed your question, but that to me is the dynamic of a healthy brokerage world and networking.
No, absolutely. So I wanted to make sure that not only borrowers know, but the people that are out there interested or are brokering are doing this. They're tying in other broker shops that have more funding opportunities than they do. And there's shared commissions and things like that. And you are able to grow your business. There's a lot of actual institution or hard money lenders that join up with us because they want to either add a long-term product, or they want to add a land product, or they want to add a certain type of product, but they don't have the bank line for it. So they tie on with people like us, and they add more opportunity to their business by using a brokerage shop. They're not adding overhead. They're not adding employees. They're not adding operational expenses. They're not adding capex to their business. They're not adding anything. They're adding opportunity and sharing the commission structure. So people that are listening today, you very well may be having a hard time in your wholesale business or flipping business or anything like that, but you have opportunity to people. Anybody that does really well in growing businesses knows when to pivot a vertical, when to add a different product, add a different system. We offer that to people so they can add a whole new revenue system to their business. So, Rob, when people do tie on with us, and we can speak directly to us or just the brokerage industry in general, when people add on as a broker or a lender to another brokerage shop, what should they expect? How does that process run? What should they expect in the relationship?
Is this where we address fees now, or
Ah, yes, we can. Yes.
so when early on when we were talking about brokers, do we have a good name, a bad name? I think all in all, brokers out there have good intentions, and there are good brokers. I think where we get a bad rep is when one, two, three brokers get attached to an opportunity because maybe it took that to network to get to the right funds. And you will hear this thing called a broker chain. And a broker chain is can be a good thing, can be a bad thing. Lenders and bankers get nervous of a broker chain because 9 times out of a 10, a deal won't close because you have a greedy broker, a part of that chain. And how many times have you seen a deal get submitted? I need three on this to close, and it's a $50 loan. It's like, okay. So, that working with brokers that are cash flow minded and not home run minded. And if I offend you with what I'm about to say, I do apologize in advance. But I hear it all the time is, I'll have bankers say, we don't work with horse. If you want to make a little bit on this, we can close it.
Mhm.
And those are the people that we work really well with is we'll have a conversation beforehand and say, hey, on this $5 million deal, bank wants two. This is what we can get away with. We're all going to share this. But if somebody wants to get greedy, the deal dies.
Yes.
And it's the cash flow minded broker that wants to meet the need of the client and live to close the next deal. Those are the ones that I see have been in this long term, like me, and and do very well. But it's that one broker that might get lucky and close one or two that feels that he needs 5 points by writing the information on a napkin and sending it out to the world, wishing it the best of luck. That kills deals in our business every day.
No, absolutely. This is a way to service and be a steward to the industry for your borrower. And when you do good business and close appropriately with appropriate fees, you get more business. We're a volume play. One of the things I want us to touch on too is the dreaded daisy chain. All right. So when you guys have a deal and you are a broker and you got it from a broker that got it from a broker, or however long that chain is, we
Yeah.
do see that quite a bit in our shop. Here's some advice that you guys can do while running your own shop, or be prepared if you ever bring it over to us. Is that if you bring the deal to us, you are our client along with the sponsor. We pay you as the broker. You delineate your operations downward to whatever person that you see fit. That is an appropriate daisy chain payment structure. What kills your deal, like Rob was saying, is that the person that got the sponsor wants a point. The person that broker sent it to the broker, he wants a point. Now you want a point. We haven't even talked about the bank fees yet. Because the people that are taking the risk on the deal, they may be charging 2 or 3 points.
They don't even know the client's name yet.
Right. I've had broker chains saying, well, I want 3 points, and the bank's getting one. It's like,
Yeah, that won't happen.
it's never going to happen. Okay. So, how to structure this business appropriately is running it like a business and running it like you have employees. So, if you have that chain, be very upfront on what is going to be paid to the person below you. Are they getting 20% of your collected fees? Are they making 50% of your collected fees? What gets people bit the hardest is to try to negotiate fees once terms are delivered.
Yeah.
There's
And Alex,
no, yeah,
Alex, keep that thought for everybody that is on this call, I want to ask a question and just give a thumbs up or give a yes. How many of you have been a part of a broker chain? We're close to closing, and then, oh, wait, we forgot about Steven. Steven's the one actually that originally sent it, and we need to include him. I've seen broker chains where we forgot about two and three other brokers, and then right the day before closing, we need to figure out their comp plan. And so that's one of the biggest mistakes I see is not knowing who all's involved in the deal or who had the main relationship. And those negotiations don't occur before closing. And now the closing is held up. And that's not fair to the client. It's
Mm-mm.
definitely not fair to the bank because the bank has done their part. They're ready. So anyone,
And this is not just on the lending side. Think if you're a wholesaler or anything. Anytime there's a chain and it's a like a chain of command, um, you know, you have to,
hey, there's a good question that just
yeah,
came up. Does the
like,
borrower know about the chain? See, that's key.
that is key.
If you're going to be in this business long term and be old and fat like me, you have to set expectations. You have to be honest and you have to be transparent.
Mhm.
We have had opportunities that we had to broker. We had to go to a family fund to get that family fund. I had to go to Jared. Jared had the relationship. He's got the signed agreement. So I've gone back to my client and say, hey, just letting you know, we have an opportunity to fund it.
Mhm.
Here's what I've got to do. It's going to involve another person, but we're going to cut our fee
Yeah.
down to half to get there. And by the time it's all said and done, these are the total fees you're looking for. Yeah, you set that expectation and
Mhm.
set the why and set and show them the money, like point, there's the money, then yeah, that's an opportunity. But I don't think it's fair
Mm-mm.
to get to the closing and then all of a sudden your client who's ready to close and probably needs to close, or maybe it was a foreclosure bailout and they've already stressed out and lost hair. And now they see, oh, hey, what's this 8 points on here for?
Right.
That's not cool. So yes, set the expectation, but the other thing too is paper it up. If you're working with other brokers,
Mhm.
don't do. I mean, we're in Texas. We believe in the Texas handshake, but in today's world, I've seen it too much. So paper it up before you close, and when you paper it up, also have the client sign it so they're aware of all agreements and they're aware of what they're paying for. I think that's a fair and smart way and protects everybody and then keeps everybody honest at the closing table.
Absolutely. And Rob's point, the the sponsor doesn't care. The borrower does not care that there's 900 people involved. They want their deal done. Okay? It's the fact when they find out that the fees are going to kill their deal. If you're a broker, just like Rob said, there's been times where we had to go to a specific family office. And to get to that family office, we had to involve somebody. That came out of our side. That came out of our pool, because we had to do that to get the deal done for the sponsor. So this is not the time to go fleece some sponsor and rack up their bill where the bank's never going to let that close anyway. And then you're trying to get money on the side, stuff like that. Just do good ethical business. So if you need help to get a deal done, don't just tack on more points and more of this and more of that. It encumbers in your total net revenue and to get the deal done, you let their sponsor know, just like Rob said, by the way, we can get this done. We had to call this gentleman. He's going to be involved with us. This is how it's going to break down the whole line. And then if you guys ever do open up a brokerage shop on your own or work with this, know that if you ever had to use us, we want to talk to the sponsor. We want to know that they are involved. They want to know that we are working with you, that we're a team.
I know they're real.
Yeah, and we're real and they're real. So don't be shy about that and get everybody involved. When you have more people involved, this is a good shop would be a total team. This is the team I'm using and to get this done because people come to us the most because their deal has hair on it. We know how to comb the hair. So we don't care that there's hair on the deal. We just want to know what it is so we know what hairstyle to do. Okay?
But if you also want to gain more confidence of your buyer, borrower, refinancer, hold on, sending the voicemail. If you want to gain that confidence, it goes back to being transparent, explaining again. I'm duplicating myself, but explaining what is the cost, What is the cost engaging this person? But you also want to work with people that are realistic. If I've got a $20 million deal, why does a broker that just referred it to another broker deserve 2 points? That math is never math, and that deal is never closed.
Hmm.
And on those big opportunities, it's okay. We think that I got to get my 1%. I got to get my 1%. On a $50 million deal, a 1/4% doesn't pay your bills, an 1/8% doesn't pay your bills. So also look at the math. We were, I've broken brokers that have worked with me who were fixated that I got to get my 1 and 3. But when we started looking at the math and started, we Alex and I, we got a deal that's going to close in 3 days.
Hmm.
I didn't do much work. Do I need to make 50,000 on a deal that took 3 days?
No,
Yeah. So
but we
yeah,
can
I
get we
started
can
on
get five
I
more deals from them.
did on that, but I hope that point was made and valued.
Right. All right, guys. Well, that is 30 minutes to the hour. And what do I do every 15 minutes? I make that ask. Go make sure that you go check out our Instagram, Facebook, YouTube, LinkedIn pages. Make sure you give us a like, a comment, a share. If you know somebody that could benefit from weekly education on products, how to run your business as a lender or a borrower or anything like that, please get them on the show because we're going to go to a Q&A section pretty soon. And every week is a different topic, just like last week. We focused on commercial and residential short term. The week before that was foreclosure bailouts, things like so. Every week is going to be a new topic on most likely either infrastructure or products and lending that you have no idea that even exist. Okay. So moving on, we talked about sponsors using brokers. We talked about brokers using brokers. We talked about even lending shops adding brokers on to increase their product matrix. So let's go through the process of actually of what each person, a broker or a sponsor, would should have in their pocket when they actually want to submit something. Go over what's a nice little stack. It may not be a full data room, but what's a good little stack that somebody should be ready to have, whether they're asking for $100,000 or $100 million?
Well, again, I'm going to go old school and I'm going to bore you, but one of the things I taught borrowers to ask is, whoever you're talking to, ask them if they understand the 5 C's of credit. How many people know in our world what 5 C's of credit is? And if you understand those 5 C's of credit, then you understand how to submit a write up, how to know if it's a deal or if it's an opportunity. And so the basic is when you're submitting it to me, to a lender, in that write up, what is it that you're wanting? And the biggest piece is let's talk about the first C, collateral. That is the most important aspect of any ask is what is the real estate? Um, Again, 8 times out of 10, I'll talk to, hey, have you seen the property? Do you know anything about the property? Oh yeah, it's a multifamily over here in Corpus Christi. Oh, cool. Okay, and then you'll pull it up, and it's a vet office. That's a little different. Oh, I think it's a vet office. So understand what is the collateral in today's world. But back in my day when I started, I had to drive to the location. I had to take pictures with a camera, and in my loan committee, I had to show pictures that I saw the property, that it really was there, that exists. In today's world, we have so many tools where we can tour, see the property, tour it, and be able to discuss it. So a lender, number one, is going to want to know what is the collateral, what's the condition of the collateral, what is the need, in this collateral, and be able to show that, spell that out. That's the number one, because that's what you're loaning on is the piece of collateral. Then can I go through them? This is my
Yeah,
favorite part. This is
yeah.
this is
No,
yeah, this
so
is my
guys,
nerding, man. This is my
guys, I
nerding.
want you
So
to write down these things because even as a borrower, understanding how to make your package for submission, you'll get better terms and better approval. So remember, the first C was collateral. Rob, what's the second C?
So the second C is conditions. And that is what are we asking for? And like if you submit your loans, in a bullet point, the way I'm spelling it out right now, you're going to get more feedback from lenders and more quicker response from brokers because they can see it and understand it. But the condition is, what am I asking for? Rob, I need a 5-year bridge loan, or I want a 5-year loan, you know, amortized for 30 years, cash out refinance, or purchase with 30% down, but you're spelling out what is the term. And I can look at that quickly and either know what lender I'm going to or that I'm not going to anybody because I want an 80-year, 10-year no payment, 80-year amortized, and I want you to, buy it from me. Those are terms that won't get done. So, but understanding what is the loan request? Is it a 30-year fix? Is it a 1-year bridge loan? Is it a fix and flip? Is it a rehab? If it's a rehab, what is the budget? And so by spelling out, there's the conditions of the loan. What am I asking for from the lender? What does my borrower need?
Mhm.
Does that one make any sense?
And to add on to to those conditions, if you rate should never kill your deal. Okay. Long term, it's a little bit more susceptible to like your profit margins, but rate and terms can kill a deal, but rate should never. However, if you guys know that there is a rate that absolutely destroys your
Yeah, I
profit
love that.
margin,
Yep.
you should say, by the way, I'm rate sensitive to this margin. I can't go above 11 and a half, and this is why. Or I can't do this, and this is why. As an investor or anybody that buys businesses or anything like that, you should know what your rate sensitivity is. So when you bring it to your brokers and lenders, they can tell you right away if there's opportunity or not. So you're not ordering appraisal and going all the burning capital on like, okay, great, we got terms. It's 12.65. It's a 5-year, and they're like, well, I can't do anything over 10. It's like, why do we work on this for 3 weeks? We could have told you that the primes. We had here's a real case. We had got terms for a deal, 2 deals in Mississippi. Getting multifamily done in not Mississippi, Memphis. Getting multifamily done in Memphis is difficult, but we got a very attractive rate of like 8.25%, which is
8.125.
8.125%, which is unheard of. Okay, and we got it done. They wanted rates at 6.5. Prime is at 6.75 right now. They wanted rates on a DSCR product below prime. That's that's impossible.
It's my
So,
rate and I want it now.
so if you are rate sensitive, make sure you know that. Not to say to kill your deal, but to be like, well, this is where you're going to land out. So you can maybe rework your numbers, rework your purchase price, rework your strategies, rework something else in the variables of debt to see if you can get this capital to work for you. But yes, that does make sense. I just want to add that on. There is number 3C, capital. What is capital?
So when we're submitting a deal, 100% of lenders want to see a personal financial statement. Believe it or not, I have asked brokers or agents, hey, did you get an updated PFS? What's a PFS? So that personal financial statement is going to break down, what they own, what they have, and show liquidity. So when we're talking about capital, a lender wants to know that you might have a little bit of money in the bank, that you have either let's say it's a purchase that you have and can show the liquidity for the down payment required, or if it's a refinance, do you have capital that makes payments that is there for repairs? So what is the liquidity? And ask borrowers that, and make sure that the personal financial statement is accurate. One of the things that I see is, well, I don't put everything on there. I don't want the IRS to say. IRS isn't seeing your personal financial statement. So be honest and put as much on there that is real, because a lender is going to look at that and they're going to judge that. They're going to use that to make a lending decision. Capital is key in this business and in this market. I know I see a lot of, I want 100% financing. Well, even still, there's got to be capital because you're going to have expenses. And if
Mhm.
you don't have that money to show, or you don't have that money, odds are your project will fail because there's going to be unseen things that occur that is going to require your capital outside of the loan. So they are, so they will look for that, and that is a part of that's one of the keys in the C's of credit.
Absolutely. Guys, if you ever hear those radio shows or anybody says, get into real estate, no money down, no money down, doesn't mean you don't need money. Okay. So I have a lot of people like, well, wait, I got 2 grand in my account. It's like you can't invest in real estate when you can't hold the debt structure, when you can't have capital to invest. All right. So, what about capacity? That's our fourth C. What is capacity?
So capacity is your ability to pay. And well, that could, in DSCR, that is, what is your rental? Can you show a rental history that is sufficient to pay back the debt? We do a lot of, no ratio loans, but even in the no ratio loans, they're looking for an ability to pay back the debt. That ability to pay back the debt could be an interest carry that's built into the loan, but spell that out that during this process, we're going to be using a portion of the equity held in a reserve account to pay back debt. But we're looking for your capacity to own and carry the loan request.
And one of the things that people think is the lowest one, but it sure as hell makes a lot of difference when you're trying to, as a good broker, negotiate lower rates or better terms. Character. What is character?
I wish they would change the name of that.
I know, but there has to be 5 C's,
So
Rob.
I'm the
There has
moron
to
that
be.
goes in. Yeah, when I go do my educational seminars, and I call it credit, and then I always get some old schooler. It doesn't mean credit; it means character. But what they're looking at is what has been your proven history to pay back bills, and character does play a role in. A lender wants to make sure that you're a good person, that you don't want to stiff the bank, that that you have a history or an ability to pay bills. So, long story short, character to me is your credit history, your ability to prove that you have paid, will pay. They want to know they're getting their money back. And so that is exactly what they're looking for. But that also will be a big determination of your loan structure. The higher the credit score, the better the the better the rate. Sorry, the better the rate, the better the structure. Maybe less down payment, because you have a higher score. And a lower score doesn't mean that you can't get a loan, but it's probably going to be a much higher rate, and it's going to be a lower loan to value. So there's opportunities out there for low scores, but if we do those all day long. But that is your driver to structure. So if you got someone that is showing a 500 score and you want 90% financing at a 4% rate, I wish you the best of luck. You'll go on my prayer chain, but yeah, that's not happening. So that is a big part of understanding loan structure, submitting a deal that's approvable, and those are your 6 C's of credit. And your broker and your lender should know those, because that is like the matrix. When you start talking, my brain starts finding the C's, and that's how I know what lender, what term. Is it going to be hard money? Is it bankable, non-bankable? And that's what we use to determine the structure, the write-up, and where we're going for those monies.
Absolutely. Well, before we move into the Q&A section, just kind of remind everybody that is on the call and watching on social media and YouTube, give a like, give a share, give a comment, and let people know that there is a weekly call that goes over every different type of product, every way you can scale your business, from lending products to operations to how to structure a network. We're here every week on Thursday at 12 p.m. Central. So, um, let's see. Oh, and then because you said 6 C's, it's 5 C's
A
of
5C, yeah, those are the ones I use.
yeah. There,
Long time ago it was 6 C's. It's 5 C's.
yeah, because there is an
I'm showing my age.
there is an argument to the 6 C's than the 5 C's of credit,
Yeah,
but
right.
those are the five that we teach. So for Q&A. If anybody has any questions about either anything we talked about, or anything completely unrelated that has to do with operations and lending, investment real estate, how to structure things, how to get things more done, um, how to utilize technology in your practices and stuff like that. These are the time to ask. Does anybody have any questions that Rob and I can ask specifically to your needs, your deals, your structure, your business? All right, it's going once. We're going twice. And that is sold, folks. All right. So that means the deal desk is ending. Dry those eyes. We will see you guys next week, Thursdays at 12 p.m. Central. You can reach out to us on any of our social sites. You got Rob Lewis here. You got Alex Buriak on Instagram, Facebook, LinkedIn, TikTok, YouTube. Carrier pigeons, whatever you do. Go over there and check us out. And we will see you guys next week. Rob, any last things that you want to say?
No, if you have any questions, we're happy to mentor. We're happy to help. If there's a loan that you have questions on and say, hey, Rob, do you know how to do this? You can call me 832-610-4479. You can always go to my website too at fullspeclending.com. We want to be service, we want to be mentors, but we want to be teammates with the industry. So that's who we are.
And if you do that, let him know that you saw him on the deal desk. Maybe he'll give you a coupon for like 50 cents off a shake and bake or whatever you guys use. Okay. He has a bunch of them.
Love shake and bake.
All right. So that is it for today. I wish you guys the best of luck out there. If you guys need us, give us a call, send us emails, direct messages, anything that you need. We'll be there for you. Have a great day. Okay.
Thanks, everyone.